Hey, what's up, guys? Welcome back to the channel. I hope all is well. I thought tonight I would do a live stream. I apologize for not giving you guys advance notice, but I thought it was important for me to jump on the live stream tonight and just talk with you guys and first of all, make sure everybody's doing okay in the community, and then to answer any questions that you guys may have relative to investing. I think right now this is an extremely important time for all investors to be aware what's going on in our financial system, certainly what's going on from a health concern standpoint. So that's the whole purpose of this live tonight, guys, is to answer your questions and just talk about what you should be doing as an investor. I'll talk with you guys about what I'll be doing as an investor as well. I appreciate you guys starting to jump on the live stream. Thank you very much. And I think I'm gonna stay on for about an hour tonight. And like I said, I'm going to answer questions, and then I'm going to talk a little bit about what I'm doing as an investor, how I'm keeping myself in tune to what's happening in our country and around the world, and what's happening in my community as well as it relates to opportunities that may present themselves in the coming weeks. So let's see here. What do we got for as, let's see if we got any questions. Well, let me do this. Before I dive into the questions, let me go ahead and kind of tell you guys a little bit about what I'm doing. Well, I'm a long-time investor, 20 years as an investor, predominantly in real estate investing, stock market investing, and then what I call additional streams of income. That can be anything from online luxury watch sales to my eBay stores and other ventures that I have that I do to create additional streams of income. Thank you very much for the donation. Thank you. What investment platforms are you currently using or recommending? Good question. So I'm gonna pause a little bit and I guess I'm gonna go ahead and dive into the questions, guys, because it looks like they're coming in. So what investment platforms are you currently using and recommending? Well, the investment platforms that I use, guys, for stock market investing is I do my own investing. So I have established at one of my banks that I use, and again, guys, I mentioned this in an earlier video. Actually, this week I did a video that I mentioned I always recommend having more than one bank. Now, so I have one of my banks that I use, and I set up a discount brokerage account. And with that discount brokerage account, I can go in and execute my own trades. And that's what I do. And predominantly, the trades that I make are centered around financial services companies like banks. So I go in and I use that taxable brokerage account to do all of my trading. So that's the platform that I use. There are plenty of platforms out there, guys. You got Robinhood, you got other app-based platforms like that. You have your traditional platform where you can go and hire an investment advisor, or you can do like I do through the discounted brokerage way of investing in the stock market. So there are many ways to do it, but you just got to figure out the one that's best for your situation. Far as real estate, what do I do when I invest in real estate? Same thing. I do most of my real estate investing on my own, but I do hire a qualified real estate professional, real estate agent to help me identify the properties. So what I normally will do is I would ask my real estate professional, and not really ask, I would tell them the type of properties that I'm looking for and then that real estate professional will go out in the market. They will find me properties that fit my criteria. We would then sit down, discuss those properties. I would do a cash flow analysis on each property to make sure it's going to meet my cash on cash return, and it also is going to meet my appreciation test. Because when I invest in real estate, those are the two things I want to have happen. I want to have cash flow, a positive cash flow, and I want to also make sure that the appreciation, the per year appreciation percentage is high enough so that it meets my my appreciation test that I need in order for me to be able to invest in a property. So let me go ahead and move on. Let's see here. We got some more questions coming in. Do you use major banks like US Bank? Yes. For the most part, guys, I do use the major banks. Now, I will also use local regional credit unions as well. So I normally go with the big banks, normally with the big banks, I use them for like my real estate lending and my stock market trading activities. But when I'm buying cars and in some cases financing real estate, in some cases I'll use credit unions. So those are the two financial services arms that I use. I normally don't use the local community banks much. Not saying that anything's wrong with local community banks, but I typically find that the bigger banks, for my type of borrowing needs that I have, they typically will offer me a little bit bigger suite of products and services that I can use in order to make the lending process a little bit easier for me. Let's see here. Big fan of your channel, bro. Thank you very much. Do you think it is now the best period to buy real estate? That's a good question. Right now, I think real estate, I don't believe from the research I've done, has really devalued any at this point. What I think you'll start to see happen is if this health crisis continues on, one, you're going to start seeing real estate stay on the market for longer periods of time. And the reason you're going to see that is because people are uncertain about what's going to happen with the financial market. So people are, more times than not, they're going to hold on to their cash and not sell their home or buy anything new until they find out what's going to happen to our financial market. So what that's going to do to real estate is it's going to keep properties on the market longer. And normally what happens when properties stay on the market for a longer period of time, they start going down in value. So I think that's the first thing you'll see. You'll see properties stand on the market for a longer period of time, and then you'll start seeing them slowly starting to decline in value because they're on the market longer. The next thing I think you'll see is if the health crisis doesn't pass and our financial system doesn't get back on track, you'll start seeing people getting laid off from work or losing their jobs. And when that happens, you're going to start to see the default rate on mortgages go up. People are not going to be able to make their mortgage payments. And when that happens, then you will start seeing drastic decreases in real estate values. And again, guys, I hope that doesn't happen. I hope we get this health crisis under control. I hope our financial systems and our financial market gets back on track. But if it doesn't, and people start losing their jobs, then you're going to start seeing default rates and mortgages, both on the commercial and on the residential side. You're going to see default rates started to increase. And at that point, yes, real estate values, in my opinion, just my personal opinion, will start coming down. Let's see what we have here. Richard, ever thought about making an A to Z course or book on how to obtain your success? I don't know. Okay. You know, that's a good question, Roderick. I have not thought about that, but that's certainly something down the road that I may entertain and consider once we're past this health crisis and our financial systems are back on track. That may be something I may entertain. Should I leave my 401k alone, even though it's been losing a lot right now? Well, guys, I have a 401k too. And for me, I'm not going to touch it. I'm going to leave it alone. It's invested properly. But you got to understand my investment horizon for my investments, including my 401k, is long term. And when I say long term, I'm talking about 10 years out. So I wouldn't be taking anything out of my 401k for another 10 years anyways. So for me, as long as I'm comfortable and happy with the mix of investments or the balance of my investment portfolio, that I got it all in the right places, then I'll just leave it alone, because I know eventually we will get back on track. We will get past this health crisis and we will get our financial markets back on track. And when that happens, as long as I'm positioned right within my 401k with the right investments, then I think I'll be fine. But again, that's me though, because I have a 10-year outlook. Your outlook might be different. So you'll need to figure out, first of all, are you happy with the investments that are currently in your 401k? If you're happy with those investments and you have time to wait, you're not retiring next year, or you don't need the money right now, you have 5 or 10 years, then I would say consider leaving it where it is. But you need to make that determination. And if you're not comfortable making that determination, get you some professional help from a licensed investment advisor to help you with that. Not touching my 401k I agree. It depends on your age, and I think it also depends on what you have your investments that are within the 401k, what it's actually invested in. So what should people do? What should people do in their 20s be doing during this crisis? Well, I think what we all should be doing as investors is we should be looking for opportunities to pick up good investments. Now, I know it's hard to, good investments in a bad economy. I know people think, well, how can it be a good investment if everything's going down? Keep in mind, guys, it'll go back up at some point. I don't have a crystal ball. I don't know when it'll go back up, but the stock market will correct itself. If real estate does start to tank, eventually it will correct itself. So what goes down, in my opinion, shall come up. We just don't know when it'll come up. So as an investor, I think what we should be doing is looking for good deals. Right now, real estate, I don't see it moving down enough for me to jump back in yet. But like I said, if this health crisis continues and the market continues to stay where it's at and continue to decrease, and people start losing their jobs, I think the real estate market will be affected by that. And then at that point, I will then look at opportunities to buy real estate at a discount once that happens. Again, I don't wish that to happen. I don't want that to happen. But as an investor, I got to be prepared to take advantage of opportunities that will present themselves. Or why would I be an investor? If I'm not prepared to pull the trigger and make an investment, then I'm not an investor. If I'm going to be an investor, the prudent thing to do is when opportunity arises, and if it makes sense for my situation, go ahead and invest. Let's see what we got. Richard, let's see here. Richard, I like how you do your dividends. I just am not at your level. I think the other day you said you have reinvested 60,000. Look, you can take $100 and invest in the stock market. You can take $100 and buy a couple shares of stock. You can take $1,000 and buy stock. You can take $10,000 and buy stock. You can participate as an investor at any dollar amount, guys. You don't have to invest $100,000 in the stock market to feel like you're an investor. Whatever your budget allows you to do, that's what I would tell you to consider. There are all types of investment platforms out there where you can do investing with as little as $100. The question is, are you ready to invest? Are you ready to make that decision to start investing? And that's what you got to work on, the psyche part of it is, because I know a lot of people think, oh, I can't invest because I don't have a bunch of money. Guys, you don't need a bunch of money. Everybody has to start somewhere. What you got to do is get your mind right that you're ready, educate yourself, get you some professional help if you don't know what you're doing, but you want to learn, get some professional help, and then create your brokerage account and then start investing in things that you feel you want to invest in. That's my recommendation. Let's see here. Don't you use all your cash yet. Tomorrow is red day. Don't use all your cash. Well, again, guys, everybody has to invest when they're ready to invest. For me, I don't necessarily, I'm not waiting for the bottom because I can't predict the bottom. All I can do is if I see a good value out there and it makes sense for me and it makes sense for my portfolio of investments, then I'm gonna pull the trigger. Like when I made the video a couple days ago about the two new investments I was gonna be making, which was buying stock in AT&T and buying more Wells Fargo stock. I don't know if it's the bottom or not. It's at the right price for me. And again, I'm not, I don't time the market. I'm not, I just have to buy when I feel like it's the right point for me to buy. And I think all of you guys will have to make that determination. If I see something good out there and I think the numbers are right on it, I buy it. If I don't think the numbers are right, then I hold off. But you'll have to make that determination. What do you think about buying silver and gold? Hey, that's something that I've not participated in. I've never bought silver or gold. It's just not been an investment that I know a lot about, nor do I want to know a lot about it. I stick to blue chip, long historied, proven, profitable Fortune 500 companies. That's what I stick to when I invest in equities. Other people, they do it differently, and that's okay. But for me, I want to invest in a company that I believe will be here tomorrow. And so I normally stick with Fortune 500 blue chip companies. But nothing wrong with silver or gold if that's your cup of tea. It's just not my cup of tea. And the same thing with Bitcoin. Just not my cup of tea. Not that it's a bad investment. It's just not the type of investment that I feel comfortable. One, I don't know anything about Bitcoin, and I don't want to take the time to learn. I prefer to stick with companies, like I said, Fortune 500 companies. I tend to stick with those guys. Thoughts on Boeing stock? Went under 100 per share, fair value at over 3. Hey, I think Boeing, here's the deal. My personal opinion on Boeing. Long, proven, great company, pays a good dividend. But until they can get those planes back in the air that had those 2 fatal crashes, I believe it was in 2019, until that situation works itself out, personally, I wouldn't invest in Boeing. And again, I'm not saying Boeing's a bad company. It's a tremendous company. But I think they still haven't answered that question yet. They still haven't figured out why those 2 planes had a fatal crash in 2019. And until they can figure that out and demonstrate to me that that's behind them and that's they've fixed all of those errors, if that's probably the wrong word to use, but you guys understand what I'm talking about. I think Boeing's a great company, just not for me until they can figure out what happened to those 2 planes that went down in 2019, those 2 fatal crashes. Let's see here. I guess the 737s. I'm assuming that was the actual model of the plane. I'm assuming. I don't know much about aircraft, so I apologize if I'm speaking out of turn here. But someone that does certainly can chime in to the chat here. Let's see what else we got. Can a broke 30-year-old person obtain financial freedom? Absolutely. I was 30 years old, man, before I started investing in anything other than me buying a piece of real estate at 26. But far as the 401k stock market, I was 30 years old before I even started investing. So can you start investing at 30? Absolutely. Can you start investing at 40? Absolutely. You can start investing at any age, guys. So don't allow that to deter you from investing. You just have to figure out a game plan and then stick to that game plan, execute that game plan, and you should be fine. But you can start at any age. Let's see here. What are your thoughts on holding YouTube personalities accountable for their investment predictions? Should they be subject to fraud if they give advice which is not responsible or fraud? Look, guys, look, if you're going to listen to somebody on YouTube and they're going to tell you what they feel is a good investment, my recommendation is go out and do your own homework, do your own research before you go spend your money or do something because someone on YouTube showed you to do it. I just wouldn't do something that someone on YouTube told me to do. I would go out and do my own independent research. And if I'm not comfortable doing that research, then I would seek professional advice from a licensed investment advisor. And in the case of real estate, I would seek guidance from a licensed professional real estate agent. So that would be my recommendation. And I'm not knocking any of the guys on YouTube who give advice. I'm not. I'm just saying I would always make sure I go and back up what they're saying with my own research. That's what I would do. And that's what I would recommend. Let's see here. Cruise liner stocks are not cheap now. They're not contributing tax to U.S. system. Again, guys, I can't comment on that. Again, that may be for someone in the chat to comment on. I can't comment on that. All I know is, as an investor, and my whole thing I want to make sure I get across to you guys is, as investors, we have to be ready to look at opportunities when they present themselves, whether it be in the stock market, whether it be with real estate, whether it be investing in other businesses. If we have a plan that we've put together and we're trying to make sure we can accomplish and hit those goals within that plan, then we got to be ready for opportunity and not be afraid to take chances. Nothing's guaranteed in life. Investing in the stock market is a risk. Investing in real estate is a risk. What you got to figure out is what level of risk are you willing to take? And then once you figure that out, then you move forward with your plan. And everybody's level of risk is going to be different. What exactly did you do when you worked in banking? I was a commercial banker. So what I did was I specialized in providing loans to commercial real estate investors. So for instance, someone would come to me to say, hey, I want to buy a 30,000 square foot industrial building. And then I'm going to put multiple tenants in that industrial building. But in order to do that, I need financing. I need financing to purchase the building, and then I need financing to do the build out for each unit. Within the institution I worked for, the bank I worked for, we would provide that type of real estate financing to individuals and entities. So that's what I did for the better part of 25 years. Let's see, how much money do you need to invest in real estate? Well, you can, that depends. Depends on type of real estate that you want to invest in. If it's a single family home and you want to, or it could be a duplex. Say you wanted to buy a duplex and you wanted to live in one unit and lease the other unit. That would be considered your primary residence. And if you haven't bought a home before, you may qualify for what they call first-time home buyers or an FHA 3.5% down payment loan. So that 3.5% would be based on the purchase price of the actual home itself. So that just depends on the type of real estate you're looking for. If you're a true investor looking for investor real estate, investment real estate, normally with residential, you got to put at minimum of 20% down. Now it could be higher depending upon the property type. Normally with commercial real estate investing, commercial real estate investing calls for, in most cases, 30%, sometimes 25 to 35% down. It just depends on the property type and the age of the property, where it's located, the type of cash flow it throws off, those types of things. Let's see here. What else do we have? Do you focus on cash flow or capital gains? Well, I focus on both. So when I buy a piece of property, I always have a holding period. And normally that holding period is going to be between 3 and 5 years. So the purpose of me buying the property, number one, is so that I can get some cash flow, but the cash flow is not taken out of the property to use to live on. That cash flow is what I want to use to put a reserve so that I can save up for the next property that I buy. Where the capital gain comes in or the appreciation comes in is when I sell the property. And when I'm going into a project or getting ready to buy a property, I want at least a 25% appreciation return on that property once I'm done holding it and I'm ready to sell it. So I go and check and make sure I do my research to see what type of appreciation levels that particular property has had over the last 10 years. And that will kind of give me and predict for me what type of appreciation it may have in the future. Once again, it's a risk. There's no guarantee that I'd make my 25% appreciation return. There's no guarantee. That's based on, me doing it for 20 years, knowing the market, knowing the location, and then I just go ahead and I pull the trigger. Let's see here. What do we got? Does your advice work outside the U.S.? Well, again, guys, I don't know every real estate market in the world, but real estate's real estate, the way I look at it, no matter where you buy. Now, there may be different laws associated with investment real estate in different countries. So from that standpoint, I can't tell you what the real estate laws are in the UK. What I can tell you is what the real estate environment in the United States is. And normally, no matter where you go, real estate is real estate. Now, some countries may have more favorable laws for landlords. Some of them may have more favorable laws for tenants. So you have to be careful there. But I know where I live, in the state I live in, is very favorable for landlords because since Florida traditionally is a tourism state. It's a state that thrives on people coming here for short periods of time, enjoying it, and then leaving. So a lot of times investors come here so that they can get rental income from these people who come here temporarily for 3 months or 1 month or 6 months. So Florida has very favorable laws when it comes to landlord protection, whereas other states may not have those favorable laws. It may be slanted towards the tenant. You have to do your research and figure that out before you invest in real estate, especially if it's residential real estate, even commercial real estate. So figure that out, and then that'll let you know kind of what direction to go in as you get ready to buy real estate in your specific state or country. Only money in real estate is commercial, and even that is getting hammered now. Chase Jr. Hey, everybody's entitled to their opinion. I think there's always opportunity in real estate. Over the last 20 years, for me, I bought a ton of real estate in the last downturn in 2008, picked up a bunch of really good properties, and I kept those properties, the majority of them, for like 6 years. And I started selling them off in 2014 when it had reached my 5-6 year holding period. I started selling them off, and it worked out really well for me. So I think there's always opportunity to get good, solid investments. No matter where you're at in the economy. It could be a fantastic economy and you can still pick up good real estate buys if you know where to look. It can be a terrible economy and you can still pick up good real estate buys if you know where to look. So I just think you just gotta know what you're doing in order to get deals in both good and bad economies. Let's see here. Any other questions? Do you ever sell your neighbor's Audi? No, my neighbor is he's holding on to it. I think he has a lease on that Audi R8, which is going to be up in May. So he's still looking to sell it. But this guy, my neighbor, is a pretty savvy guy. He knows what he's doing. He buys Audis quite a bit. So he'll get it sold. He'll keep it till May if he needs to, and then when it's time for him to move it on, he'll move it on. He has a couple of dealers that are interested in it right now. He just thought, hey, why not put it up on the YouTube channel and see if some of your subscribers might be interested in it. If not, when May comes around, he'll move it and he'll move on to his next car. Let's see here. Richard, ever buying properties at auction? No, Yankee Doodle. I have not thought about buying properties at auction. Not that I wouldn't in the future, but when I was, the majority of my real estate I purchased over the last 20 years, I was still working a full-time 9-to-5 job. So, I didn't have a lot of time to do a lot of research and the inspections you need to do in order to buy these auction properties. Because a lot of times with these auction properties, they're going to come some deferred maintenance that you're going to need to do once you get the property in most cases, whether it be, it could have a shaky foundation, you may have to do new electrical, you may have to do new plumbing. And I'm not cut out for that particular type of real estate investing. I much prefer to just buy something that's turnkey in a super great location that I can get the maximum rent you can get possible, and then ride that appreciation wave over the next 5 years, get out of the property, and then do it all over again. So that's really the type of investment strategy I have when it comes to real estate. I just buy turnkey properties. Normally they're newer properties that don't have a lot of deferred maintenance associated with them. And then I buy them in the location. That's the first thing I look for, is location. I want the best location in my area to buy my real estate in, because in my past and in my history, that seems to be where your appreciation comes from, is from location, not necessarily the house itself. It's the location. If people desire to live in that proximity, in that location, that's what drives up the appreciation, not necessarily the house itself. It's the location. Let's see what else we got. Let's see here. So you pay market value. Yes, I do pay. In a lot of cases, I do pay market value. Now, here's the deal, though. If the market continues to decline and if we start seeing default rates go up as it relates to residential mortgages or commercial mortgages, then I think at that point, values are going to be dropping tremendously fast. So I'll wait, and then I'll start picking up properties at that time. Right now, it's not the right time for me to pick up any because I just think right now I can wait, and then that's a risk that I take. I'll wait to see if they're going to drop. I don't think they've dropped yet. I think what you're seeing is they're staying on the market longer because people are not sure what's going on with the economy, and they have a lot of uncertainty out there. So I don't think prices are dropping yet. Prices will start dropping when default rates start going up. People can't pay their mortgages. That's when you're going to see prices really start dropping. If that happens, I'm hoping it doesn't happen, but if it does, real estate prices will start dropping, in my opinion, at that point. Let's see here. I think Patterson could be better. Okay, let's see here. Greetings from Amsterdam. I love what you do for others and share your wisdom. Awesome, thanks. Hey, I appreciate that, man, from Amsterdam. Thank you very much. I appreciate that. Would you consider watches as entry to investing, in what brands? Absolutely. I'm a big time watch guy. I've been doing online buying and selling of watches for probably 12 years. My favorite to purchase and to remarket online is Rolex, Omega, Breitling, Panerai, IWC. Those are the ones that I have had a lot of success with. I don't really venture into that echelon of watches that are above Rolex, because once you get to that market, AP and some of these other more expensive watch brands, you narrow down your available pool of people to buy your watch. So I stick with the general pool. Most people who are doing well, got a decent job, they're going to be able to afford an Omega at some level. They'll be able to afford a Breitling or a Panerai or an IWC or a Rolex. So I normally stick to those brands because they appeal to the masses. So when I go out and buy these watches at a deep discount, then I can turn around and have a bigger buying pool, because I'm dealing with watches that typically a person can purchase and own. It's tough when you get to AP and Patek Philippe and all these other higher echelon brands. You narrow down the pool of people that can actually buy those watches. So not saying that you can't be successful selling those. I just think for me, it's just a chance or a risk that I don't feel like is necessary taking. I'll stick with the brands that I know people can afford, and I know I can get deep discounts on because they make so many of them. Richard, when purchasing your first property, should I avoid PMI? Well, I couldn't avoid it on my first property I bought because I only put 3.5% down. So I did have to pay PMI for a short period of time. But what you can do is, if you're buying as a first-time home buyer, say you want to buy a duplex up to a fourplex, which would be considered your primary residence as long as you live in one unit. So say you buy a fourplex, you live in one unit, you rent the other 3 units, and you put 3.5% down to get into that property. All you got to do is, I believe it's 1 or 2 years, you'll be able to have the property reappraised, or have your lender have it reappraised. And as long as the property is at an 80% loan to value based on the new appraised value, then your lender will drop the PMI for you. So there are ways to kind of get around that if you want. But for me personally, when I bought my very first single family home, I put 3.5% down, and I did have to pay PMI for a short period of time. Would it be wise to refinance my primary residence to pull out the equity, purchase a rental property now? Well, again, guys, that's an individual choice. But if it was me, I always keep equity lines on my properties so that I have the ability to be able to tap into that equity and take down another property at any given time. So I always have equity lines attached to my real estate properties because, hey, when an opportunity presents itself, I don't want to have the hassle of having to go refinance the property to pull cash out, and that refinance may take 2 months. If it takes 30 to 60 days, I may miss that opportunity to buy that piece of real estate. So I keep equity lines already in place, attached to my real estate. So when I do find something else I want to invest in, and I want to pull equity out of my property to do that investment, I have the equity line already in place. But that may be different for you. You need to make sure your situation is the appropriate one. But for me personally, I always keep equity lines on my properties. Let's see here. Hey, Richard, would you consider applying for an SBA disaster loan in the current situation? FYI, I have no current debt and maintain low overhead. Well, I mean, at this point, for SBA, as it relates to real estate, normally SBA is pretty good about offering programs once they feel as though there's been some type of catastrophic event that would prevent people from paying their SBA loan. So I would say this financial crisis and this health crises would probably qualify for that at some point. But what I would recommend you do, or for anybody who has an SBA loan, you should be able to go on to www.sba.gov, and you'll see all the programs that they have available for our current situation we're in right now. Just go on to the SBA's website, and they'll have plenty of information how you can ask for some type of deferral or rate reduction or whatever you are looking for. They'll have it on the SBA's website. How much should one earn yearly to obtain financial freedom? Any amount. You guys got to understand, it's not how much you make, it's how much you keep. And then it's how much of that you keep, you invest in the right investments. Doesn't matter how much you make. Now, don't get me wrong. If you make a bunch of money, great. But I know a lot of people that make a bunch of money and they still live paycheck to paycheck. So it ain't how much you make, it's how much you keep. And then how much of that you invest properly. So you can make $1,000 a month, and if you invest it properly, you can still be set up in, long term when it's time for you to retire and things like that. You can still be set up. So you just have to be a good steward of the money that you do make. When I started out in banking 25 years ago, and again, I was making $30,000 a year. Now, again, $30,000 back then, it was much more than $30,000 today. I get that. But my point is, I was making $30,000 a year, and I made a decision that I was going to cut out everything that didn't make sense from a purchasing standpoint. I cut out all unnecessary expenses, and I started saving the little pennies I could save. And I think I was saving, maybe a couple $100 a month. That's all I could save. And I did that till I could put $3,500 together to buy my first property. That's what I did. So all I'm saying is you can invest at any level. You can save at any level of income if you got your expenses properly organized. So that's the key. It's income versus expenses. If you figure that one out, then you'll be way ahead of the game as it relates to saving money and then being able to invest that money into assets that will create income for you. Let's see, it is 40 minutes in, guys, so we're going to have about 20 more minutes, and then I'm going to get off the live, so I'm going to answer as many questions as I can here. Let's see here. Financial freedom is subjective to desires and how you manage it. I agree. Everybody has a different target number. My target number might be $5,000 a month that I need in order to be able to have financial freedom. Your target number might be $15,000 a month to make passively before you have financial freedom. It's all relative to your situation and the goals you set for yourself. I have been dollar cost averaging S&P 500 index funds as one of my long-term investment strategies. I see this as an opportunity to scale in more money at a lower cost. I agree, man. That's awesome. Dollar cost averaging is an awesome way to be able to invest money and it grow for you long term. Because guess what? As you invest, you're going to buy shares lower. Sometimes you're going to buy shares at a little bit higher price. But over the long term, through dollar cost averaging, history tells us it does quite well for those that use it. So I'm a big proponent of dollar cost averaging. Let's see here. What year did you start investing in real estate? I started investing in real estate in 1996 is when I started investing in real estate. Let's see here. What's the best time to buy high value car in the recession? Good question. I think, again, it goes back to our economy. And if our economy continues to go down and people start losing their jobs, or it cuts off their ability to make money. So, people have businesses out there, and if those businesses can't open and invite customers in to buy their product or their service, or people start getting laid off, you're going to see default rates go up again in the automobile loan section or sector. You're going to see default rates go up. And if those default rates go up, that's going to have more inventory on the, in inventory at these dealerships and at some of these high-end luxury dealers. They're going to have inventory for longer. And if that inventory is sitting there, guess what? That's what their money is tied up in that inventory. So what you're going to see is in order to get their money out of that inventory, to buy more inventory, they're going to have to drop those prices of those cars in order to do that. So I think if things continue down the path they're going and we don't get this financial system stabilized and moving in the right direction, then I think you'll see all these luxury cars, they will start going down in value at some point. The best place to learn investing is October. Okay, great. No problem. I got no problem with that. There's a lot of people on YouTube and across the world that give great advice for investing. I don't think there's one person that can only give that advice. There's plenty of people that give great advice. But at the end of the day, guys, I don't care who you get your advice from. It's up to you to be able to take that advice and apply it to your situation. So you can go do whatever you want to or whoever you want to listen to. That's great information. But guess what? That information and that knowledge means nothing unless you know how to apply it to your situation. So my recommendation is always do your own research. Don't take somebody's word for your investment strategy. What you should do is listen, gain knowledge, and then go back and do your own homework to make sure that makes sense for your situation. And if it does, then move forward with it. If it doesn't, start over and get more information that you feel is the right thing for you. Let's see here. Richard, what would you consider a good long-term stock that pays dividends? Like I said, guys, go check out the channel. A couple days ago, I dropped the video explaining my thoughts on that. But, you know, go back into the channel and take a look at that. But the two that I like are AT&T and Wells Fargo. I think AT&T. I didn't look at the per share price today of either, but a couple days ago when I did the video, I think AT&T was trading at $30 a share, and in January it was trading at $37, January of 2020, and the dividend is around $2.08 per share. That's the annualized dividend return. And then Wells Fargo was trading at, I want to say $27 a share. And again, this wasn't today. This was several days ago. And in January, it was trading around $49 a share. So yeah, I think Wells Fargo is a huge bargain. And the dividend is great as well. What I would tell you guys, and I know what we'll get, Wells Fargo did this, Wells Fargo is no good. Look, man, go into their, go look at the balance sheet. Go look at their financials. Don't just start saying things aren't any good without going and doing your own research. Please go look at their balance sheet. Wells Fargo has a super great balance sheet, guys. I mean, think about it. Think about in 2008, in the downturn. Name the only bank that really didn't get hit hard in the 2008 downturn and didn't. Wells Fargo. Hey, I'm only one guy telling you what I think. Go do your own research. Wells Fargo did extremely well because why? They were a conservative bank who did not go out and do all of these subprime loans. They didn't do all of these stated income real estate loans. They didn't do any of that stuff. So they made it through the 2008 downturn. They were unscratched. So I think one of the reasons why the stock is down now is because they did get into a little bit of trouble, but I'm not going to get into that on this live. But I believe it's one of the best bargains out there right now. Again, I'm telling you what I believe. I'm not a professional stock picker. I'm not a licensed investment advisor. I'm not giving you recommendations or advice. But the question was, what did I think? So that's what I think. I think it's one of the best stocks out there that you can pick. Plus, it has a super good dividend attached to it. Let's see here. What do we got? Yeah, okay. I just had a debate about Wells Fargo. I definitely researched further. There you go. Appetite for a chick. You hit the nail right on the head. Go do your own research. I'm telling you guys, don't be listening to these guys on YouTube or anywhere else. Go do your own independent research. You don't have to listen to me because guess what? I'm a 20-year vet at investing, and I've done extremely well. So I have nothing to prove to anybody. I give you what my opinion is. If you don't like it, guess what? Don't listen to it. Move on to the next guy. But my recommendation is go do your own homework. That way you educate yourself so that you know exactly what a company is doing. And all that information, guys, is public information for these publicly traded companies. It's public information. All you got to do is spend the time, go out there on the internet and find it. But it's public information. Go read up on Wells Fargo. Not only read up on them, but take a look at their financials for the company. It's public record. They have to put that information out there because they're a publicly traded company. Let's see here. Are you still searching for investors for the condo project in Florida? Oh, good point. Thank you, Texas Horsepower. Thank you for bringing that up. That investment in Cape Coral, Florida, and again, guys, if you're not sure what I'm talking about, go stroll through my videos from last week and a half ago. You'll see it out there. But that project, in my opinion, is a great project. What I'm running into is with the developer. They have 11 units that are complete and ready to go. But I believe they have an offer on those from an out-of-state investor. My problem is I don't want to invest in the phase 2 or phase 3 because I'm not sure how strong the developer is. You got to understand, in my line of work, or my former line of work, when I was a commercial banker, we financed tons of projects like this. And one of the things you run into is developers who don't have enough liquidity or enough capital to be able to finish projects. So what normally happens is, before they'll start phase 2 or phase 3, normally they have to meet certain not income, but certain capital thresholds. They got to put in so much liquidity of their own in order for to get financing on phase 2 or phase 3. So that's my only hang up with that project, is I'd prefer to buy the 11 that are already done, because you automatically have cash flow. I'm not certain about phase 2 and phase 3 because I'm just not that confident in the developer. But that's my analysis. Some other investor may feel differently, but for me, I'm not going to mess with and take on the construction risk associated with a developer I'm not quite sure has enough liquidity to finish the project, and I don't want to be his liquidity. He should have his own liquidity. I don't want to be his liquidity and have all this construction risk on me as the investor. So we'll see. We'll see if the 11 units, that deal falls apart. If it does, then I'll jump on that deal. If not, I'm going to keep looking for the next one, and then we'll go from there, and I'll keep you guys updated on that. Hey, Richard, do you have an email address? I don't have Instagram or Facebook. Yes, go into any of my videos from the last week in the description box, and you'll see the email address in there for RF Financial Consulting LLC, which is my coaching and mentoring company that I have. So go into any of the description boxes of my last 5 videos, most recent 5 videos, and you'll see at the top there, you'll see RF Financial Consulting LLC, and you'll see the email address in there. Just shoot me an email. If you don't own any supercars today, would you go out and buy one in this economy? Absolutely, I would. Absolutely, I would buy a supercar at any point in our economy. You know, if you get it at the right price, you get it at the right price. For me, I think differently about money. I don't really concern myself with depreciation and things like that when it comes to cars. Now, what I do concern myself with is if I got cash tied up in a supercar, like I got 2 of them, and there are opportunities that start coming on the market, like real estate opportunities. If we get a sharp decline in real estate prices, then I'll liquidate those cars and take that cash and buy real estate. But right now, I don't see real estate prices going down yet, so I'm gonna keep the cars. But if I see them going down, and it's just a fantastic opportunity where I can pick up me a couple of properties, then I'll sell these things and take that cash and buy the real estate. I'll buy as much as I can. I'll take every penny that I have, with the exception of my reserve. I'll take every penny with the exception of my reserve, and I'll buy real estate. If the prices go back down like they were in 2008, absolutely, I'll jump all over it. Is paying all cash for your cars bad? No. If that's your strategy and you want to pay all cash for your car, go right ahead. Nothing wrong with that. I know a lot of people that do that. I don't do it because I don't see any need of, I'd rather keep my cash and keep it in the stock market, or keep it in real estate, or keep it in luxury watches, or, keep it in other things that create income, as opposed to me taking a wad of cash and putting it in a car. But that's just me. Other people do pay cash, and they do just fine paying cash for their cars, and that's their strategy. And whatever your strategy is, that's what you should do. Let's see here. Is it good time to invest in REITs? I don't know. There's a train of thought out there that, obviously REITs are, in most cases, are publicly traded companies. They're publicly traded companies that go out and buy real estate in certain asset classes. So, for example, a REIT could have a asset class of just apartment buildings. So they could have, 1,000 apartment buildings within inside that REIT. And who knows? I mean, if the real estate economy tanks, well, put it this way, if the overall economy tanks and people lose their jobs, can that affect the REIT? Maybe. I don't know. But I think REITs are normally pretty solid investments, but I think all investments are down right now. So it doesn't matter what investment it is. I don't care if it's an ETF. I don't care if it's an index fund, a straight up mutual fund, an individual stock, a bond. Well, bonds might be up, but the other ones, they're down right now. So I think what you got to look for is the history of a RIT and how profitable has it been in its history, and what type of asset class is it invested in, and will that asset class hold up in a down economy? In a lot of cases, apartment complexes do, because people need somewhere to live. People get displaced out of their primary residence or their single family home. Their next step is they got to find an apartment to live in. So normally RITs, when the market is down and real estate is down, normally they still do okay, because they offer a product that people have to live in. I mean, if you can't live in your house anymore, normally you got to go rent a house or rent an apartment, and that's where. So, but all investments are down right now. You just got to look at the history of the investment and figure out, does it make sense for you to buy into it now while it's cheap? And then hopefully over time, it'll go back up, which will increase the value of your investment. So that's what you'll have to figure out. 4 minutes, guys, and then I'm going to end this live stream. So let me answer a few more questions here. Do you not pay rent? You do not have to pay rent right now, do you think? I'm not sure if that question is to me or someone else, but I would say pay your rent if you're living somewhere and you still have to pay it. But again, I'm not sure what you're talking about there. What is your thoughts on buying stocks right now, or do you think they will go down more? Is $500 enough? I think $500 is enough to buy stocks. Absolutely. It depends on the type of stock you want, though. Will they go down further? I don't know. I mean, I'm no expert on that. All I know is most of them have went down. Not all of them, but a good chunk of them. And I think at any point now, it's a good opportunity to pick up a lot of these great companies at a discount. Personally, I stay away from the bad companies. I would stay away from these companies that just sprung up last week or just sprung up a year ago, and they don't really have a long track record or long history. Me personally, I stay away from those type of companies. I don't invest in those type of companies. Not saying that they're bad, they just don't have a long enough history for me. So I normally stick with the Fortune 500 type companies, the blue chip type companies with high paying dividends. Do you train people to trade options? No, I don't, because I don't trade options. I have no idea how to trade options, nor do I want to trade options. I'm a traditional long-term stock investor. That's what I do. And sometimes I take a hit, like I'm taking a hit now. But the good news is I've been through this before, guys. It'll go back up. I've been through this before. And I know there's this train of thought out there. This is the catastrophic of all catastrophics. We'll never recover from this. Guys, we said the same thing in 2008. We'll never recover. We said the same thing in prior recessions and depressions. We never recover. We'll recover at some point. Do I know when? No. No one knows when. But at some point, we will recover. Do I purchase index funds? I have in the past. I have a few of those in my Roth IRA. So yeah, and I think I got a few of. I think I have some in my Roth IRA. I have to check that, but I believe I do. Let's see here. What do we got? Okay. All right, guys, I guess I'm going to go ahead and wind it up. Thank you guys so much for taking an hour out of your precious Sunday evening to hang out with me. I hope you guys are doing well. I hope your families are doing well. I hope you are positioning yourself to be able to make some investments if it makes sense for you and your financial plan. Be ready, be in a position. If you're not ready in a position, then I would say, or financially able to do that, I would say use this time to make sure you get your skill set up. You know, start doing some research, reading some information, listening to people, but then researching what they're telling you to do before you do anything. I think this is a good opportunity for people just to get their skill set up and to get their investor skill set up. If they're not in a position to make investments right now, maybe 3 months from now, you'll be in a position to make an investment. If you guys need any type of individual one-on-one conversations with me around financial freedom and what I do in order to put myself in a position to do that, remember, guys, I got a company called Financial Consulting LLC. Certainly drop me a DM on Instagram. I think my Instagram is somewhere here on the screen. Drop me a DM and I'll be more than happy to talk with you about my mentoring and coaching company that I have. It's going fantastically well. A lot of you guys on the YouTube channel have embraced that company and embraced me on a one-on-one fashion. And I think from all the feedback that I've gotten, it's been going very well. So I'm thankful for that. And I thank you guys who have trusted me with an hour or 2 hours of your time and allowed me to help you put together a plan for your financial future, or at least help you reel in some things and think of some new things in order to adjust your plan somewhat. So remember, RF Financial Consulting LLC. Also, in the description box of most of my most recent videos, you'll see the email address, which is rffinancialconsulting28@gmail.com. Well, all right, guys, thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys stay safe out there, but always keep chasing your greatness and always believe in yourself. And I'll catch you guys on the next live stream. Peace.